What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen, founder of Wolves of Investing, and I believe that the best way to achieve financial freedom is through investing. Today, I'm going to be talking about 3 ways to invest your first $1,000. But before we get started, I want to thank you all for liking, commenting, and subscribing. You guys are awesome. Before I can tell you about the 3 ways to invest your first $1,000, I need to give you a brief overview. I've been investing for over 20 years. I've managed to grow my $2,000 account to over $200,000. Through that time, I've made so many mistakes and I've experimented with so many different styles of investing. Even though I've made so many mistakes throughout my investing journey, I've still managed to grow my portfolio over 100-fold. And that's because of long-term buy and hold investing. So these 3 ways that I'm going to go over are based on long-term buy and hold investing principles. So number 1, the first way I would tell my younger self how to invest his first $1,000 is the S&P 500 index. The S&P 500 tracks 500 large cap stocks in the United States. It basically represents 80% of the United States economy. A long-term bet on the S&P 500 index is betting on the future prosperity of the United States of America. Now here are 3 reasons why I think investing in the S&P 500 index is a great way to invest your first $1,000. First, over the last 50 years, the S&P 500 has returned approximately 10% per year on average. What that means is that $10,000 invested in the S&P 500 50 years ago would be worth over $1.1 million today. Now that is how to make money in your sleep. Second, the legendary investor Warren Buffett has said that he will put 90% of his money in the S&P 500 after he passes. He didn't say he's going to put it in Coca-Cola stock. He didn't say he's going to put it in Apple stock. He didn't even say he's going to put it in Berkshire Hathaway, the company that he's run for over 50 years. He said he's going to put it in the S&P 500 index. And the third reason is that most money managers fail to beat the S&P 500 in the long run. By investing in the S&P 500, you're able to beat most money managers who manage money for a living. So this is the ultimate lazy man's way to invest in the stock market. So how do you invest in the S&P 500 index? There are dozens of mutual funds and ETFs that track the S&P 500. 3 ETFs that I like are the Vanguard S&P 500 ETF, ticker VOO, the iShares Core S&P 500 ETF, ticker IVV, and the Spider S&P 500 ETF Trust, ticker SPY. When I'm looking for a mutual fund or ETF that tracks the S&P 500, I'm looking for one that has low fees, high liquidity, and that it truly tracks the S&P 500. These 3 ETFs fit my criteria. So if I were to invest my first $1,000 into one of these S&P 500 ETFs, would I invest it all in one fell swoop? Or would I invest it slowly over time over a 1 or 2 year period? Based on my own experience, I would rather invest it slowly over a 1 to 2 year period. Many beginning investors make the mistake of choosing a great investment, putting all their money into it very quickly, and at the first sign of trouble, they get out of that investment. For example, they may get into this investment and 5 months later, it made me down 10%. And they get scared and worried, so they just sell out of that investment. That's the ultimate cardinal sin of investing, buying high and selling low. And I've made that mistake many, many times, which is why I would rather invest that $1,000 slowly over the course of 1 or 2 years, rather than just put it all on the line. Now, don't get me wrong. Sometimes you're truly in a bad investment and you need to get out of it. I'm just speaking from my own experience with the S&P 500. On to the second way I would tell my younger self how to invest his first $1,000. And that is the dividend aristocrats. The dividend aristocrats are stocks inside the S&P 500 that have been raising their dividends every year for at least 25 years. These stocks are also called dividend growth stocks. If you're the kind of investor who likes to get paid cash dividends from your portfolio and likes to see those dividends grow over time, then I think the dividend aristocrats is a great way to invest your first $1,000. One ETF that tracks the dividend aristocrats is the ProShares S&P 500 Dividend Aristocrats ETF, ticker NOBL. As always, do your own research, but I think that this is a great way to invest in the dividend aristocrats. And the third way I would invest my first $1,000 in the stock market would be to invest in a basket of somewhere around 5 to 20 stocks in companies that I know and understand very well. For example, I've been a long-time customer of Amazon, ticker AMZN. I really like their products and services. I use Amazon Prime. I watch Amazon Prime Video, and I use Amazon Music and Audible and Kindle. This is a company whose products and services I really like. And I think that 10 years from now, Amazon will be making a lot more money than they are today. Now, of course, I do more analysis on a stock I'm gonna buy. I look at the financial statements and I do further research. But on a basic level, I need to be able to answer some questions about that company. Do I know what this company does, and do I understand how they make money? Do I like what this company stands for, and do I like their leadership? Do I think that 10 years from now, this company will be making a lot more money than it is today? If I can answer those few basic questions positively, then I may have a stock that I'd be willing to invest in. So that's all for today. I hope you all enjoyed this video, and I hope you learned something from it. If you did, drop me a line in the comment box. Which of these 3 ways will you be using in your own investments? And if you haven't yet, be sure to click that subscribe button below this video and click the like button. Thanks for watching, and I'll see you next time.